Welcome to the Policy Shop, weekly conversations with public policy experts where we'll dive into the most important issues affecting all of us here in Illinois. I'm Hillary Gowans. Let's get started. Welcome back to the Policy Shop. I'm Hillary Gowans. Homes were flying off the shelves earlier this year, but now the housing market is cooling down as interest rates increase and inflation soars. Here to talk about Illinois' housing market is Director of Fiscal and Economic Research, Bryce Hill. Bryce, welcome.
Yeah, thanks for having me.
All right, so housing is your new favorite subject. Tell us what's going on in Illinois' housing market.
Yeah, I mean, it's fascinating. Right now, we've obviously seen over the past couple of years, the housing market's just been on a tear. Nationally, home prices since 2019 are up 25%. Some of the fastest appreciation we've seen nationwide in history, really. So that's, commonly seen as like a good sign for homeowners, as it should be. But the other side of that equation is, what does that mean for home buyers? And even when it comes time to sell your house and you're starting to look for, either upgrading or, you have an expanding family and you're trying to find something that accommodates your growing family, what do you do then? Because, home price appreciation means that all the other homes also got more expensive, and rising mortgage rates mean that on top of that price growth, your monthly payments are also going to go up because mortgage rates are just higher now. So one of the fascinating things we've seen is that housing affordability actually has reached the lowest levels we've seen since 2007. So prior to the housing crash of 2008, this is where housing affordability was basically. So fewer and fewer people are qualified or earn high enough incomes to be able to afford current home prices. And that's concerning for the future of the market and where we could be going.
It is so interesting how this has all played out. I remember being so shocked by the behavior of buyers, even just 4 or 5 months ago, people paying $100,000 over asking price, going into a house where I heard a story. My friend told me her friend went into a house, went into the kitchen, opened the dishwasher door just because she was checking out the appliances, and the door fell off. And yet they wrote a check to buy that house on the spot. And they didn't get the house because 5 other people were in line ahead of them. But anyway, it's just crazy that was what we got conditioned to think. Buy now, bring your checkbook to the showing. And here we are today. Houses aren't selling. What are the interest rates right now for home buyers?
Yeah, interest rates are at 5.41%, or at least that was the average throughout the month of July. They got as low as in the low 2% range in early 2020. So we've actually seen quite a bit of growth over the past few years. Mortgage rates over the past 3 years have climbed about 40%. Writing a check over asking price has gotten a lot more expensive. We have seen the housing market cool off a little bit. Homes are not selling as quickly, and you're not seeing, 15 offers come in 2 days for a home. But home prices compared to historical terms and the time on the market in historical terms is still, homes are still selling at a pretty rapid clip. So things are cooling a little bit, but that the historical trends we're still outperforming historical trends. So it has really interesting implications. If you look back at 2019, the average home price sold for about $209,000 in Illinois. That same exact home would go for nearly $250,000 now. So you have $40,000 in the growth in the sticker price. For a typical down payment, that means that you're paying almost $8,000 more for your 20% down payment. So the upfront costs are growing, and then when you factor in home price growth and growth in mortgage rates, you're going to be shelling out another $5,000 in additional principal and interest payments due to the home price growth and rising interest rates. So your total all-in first-year costs are basically up nearly $13,000 when you add everything up. So that's why housing affordability has really become less and less attainable.
Well, that's a big deal. I mean, even just talking about the first year between the down payment and then the costs from the interest rate spiking going up, you look at that, and that's going to deter your first time home buyers. But even beyond that first year, that's a lot of extra cost to incur. I can't imagine what that looks like for people who are maybe on the cusp of buying a year ago, starting to think, okay, well, maybe it would be more affordable to buy than to rent. That's got to be really frustrating for a lot of people. Um, and also for people who maybe need to move for their career or something. I mean, it's got to be really daunting right now to be in the position where you need to make a move. I was going to ask you because you brought up the housing bubble during the Great Recession, and I was just wondering if you could expand on the similarities and the differences between that period of time and where we are now.
Sure. So things are, vastly different. So the housing bubble and the collapse, were specific to the housing market. You had a bunch of unqualified buyers that were given loans, and that really caused, a true bubble inside the housing market. So this, what we've seen recently in the past couple of years, hasn't necessarily been the case. We have all these shifting market factors like COVID related lockdowns that have incentivized people to want to get out of cities and maybe, adapt to a more suburban lifestyle. People really became valuing their personal space compared to, in the past. And that's kind of bucking the trend that America has been on for the last several decades. Home ownership has become less and less popular, but during, the height of the COVID pandemic, we saw a trend in the opposite direction. So we have that. We also have a housing shortage. So there's roughly 4 million homes missing compared to like what we would need to actually satisfy demand in the United States. So you have an increase in the number of people who are looking to buy, but then you also have the shortage of homes that is contributing to rising prices. So you don't have the same fundamentals that are setting you up for, perhaps a big collapse like we saw in 2008, where home values just cratered. But we're definitely on an unsustainable path as fewer and fewer people can afford homes, particularly in Illinois, a state where the population is shrinking, and we continue to build new homes. So, there might be a little bit of a housing shortage here currently, but those factors aren't always going to be around as the population continues to decline and new homes get built. So, you know, economists, real estate agents, things like that are predicting that, in the next couple of years, they wouldn't be surprised to see a 5-10% reduction in prices on homes. So nowhere near the collapse of 2008, but definitely a cooling off period and definitely coming down from, most likely where we're at right now in terms of price levels.
Yeah, so it's a good point you made at the start here. So if the story behind the housing bubble was all about subprime mortgages and unqualified buyers taking on more than they could handle, how would you shorthand this blip in the housing market?
It's almost as if there was an artificial spike in demand, a temporary and artificial spike in demand caused by stimulus, massive stimulus payments from the federal government, providing direct payments to families who, even if you didn't lose your job or weren't affected really by the pandemic, you still saw increases in your income to the tune of possibly thousands of dollars. So you have that. You also have what I would imagine is probably could be a more permanent shift in the mindset and preferences of consumers, but likely is going to be short-lived and temporary in terms of this this reversal of preferences between renting and owning and having more space and a larger home to take care of. So we have a temporary shift in the number of people who are looking into owning a home for those reasons. And then on the flip side, you just have this inflation problem that is just eating away at people's ability to keep up with their expenses, to keep up with the grocery, the bill, the gas bill, and just making your mortgage payment all that more difficult.
All right. So you and I talked housing today. Previously, we've discussed whether or not we are on the verge of a recession, which was an interesting conversation from last week. If you haven't listened to that one, I would recommend tuning in because Bryce has a lot of interesting things to say. Moving forward, what are you going to be looking at in addition to this housing topic?
Yeah, I mean, I think one of the things to watch related to both of those topics is going to be foreclosure rates. So foreclosure rates have been on the decline nationally for the past 10 years, 12 years. they're starting to uptick in 2021 for the first time in recent memory. So Illinois is actually leading the nation in foreclosure rates. 1 in every 385 homeowners is in foreclosure at some stage. It's a rate far greater than neighboring states, up to 7 times greater than neighboring states. So that's going to be something to watch, specifically related to the recession angle and the housing market angle, to see where we're going. As the threat of a recession rises, and we are expecting to see unemployment rates begin to creep up potentially in an event like that. Foreclosures are going to follow pretty closely. And the housing market, we'll see how it reacts, but I can't imagine that it's going to react well to a scenario like that. So we'll be watching all of those things and see, where we're going. At the same time, you have property taxes, which we're constantly monitoring and are a huge uncertainty for homeowners. That's really kind of the final piece of the equation in terms of, your rising costs year over year. For that home that we mentioned that sold in 2019, that's now worth $50,000 more. Property taxes have also gone up by about $1,000. So on an annual basis, you have another large expense that's going up. It's a big uncertainty as far as how much higher that's going to go and what the increase is going to be year over year. So those are the main things that we're going to be watching to see, where we could be headed.
Awesome. Well, Bryce, thanks again for joining us. It was a good conversation. I'm looking forward to talking to you again soon. Listen and subscribe to The Policy Shop wherever you get your podcasts.